In this video, we are going to look at the FIFO method. So this is the question. FIFO is first in, first out method. So this is the question. Sorry. This is the question. The following information is available to you concerning material records of a certain manufacturing firm of the month of June 2016. So this is what we have. This is the information that we have. Then this is the note. Then what is required is to prepare a stock ledger card and determine the following. First is the cost of goods in production. Then secondly is the value of closing stock using the FIFO method. So we are going to use the FIFO method when preparing the stock ledger card. So first we are going to look at the formatting of the stock ledger card. So here it is. We are preparing a stock ledger card for June 2016 of a manufacturing firm, and we are using the FIFO method. So the stock ledger card has 4 parts. We have the part for the date here. Then we have the part for receipts or purchases. Then we have the part for issues, what has been issued out of the store. Then we have the balance, what is remaining in the store. So this is the stock ledger card. So we are going to be reading the question and then we feed in one by one. Yeah. So they said on 1st June there was an opening balance of 100 units at 1,000 each. 100 units at 1,000 each. So this is just an opening balance. It's not a purchase and it's not an issue. So we are going to come here where there is date. Then we write June 1st. June 1st, since it's not a purchase and it's not an issue, but it's a balance, it's an opening balance. So the quantity is 100. 100 at 1,000 each. So 100 times 1,000, the amount is going to be 100,000. That is it, and that is done. Then the second one is purchases. That was a purchase of 50 units at 1,200 each on 3rd of June. So we come here and write 3rd. The quantity was 50 units. The rate 1,200 each. So this times this, what we get is 60,000. So that becomes the amount. Then the balance here is going to be 100,000 plus the 60,000. So it will be 160,000. Like that. Then we go to the next. On 5th, there was a purchase of 30 units at 1,300 each. So there was a purchase of 30 units at 1,300 each. So this times this, what we get is 39,000. Then for the balance, it will be 160 plus 39,000. Sorry, even the quantity we add. So here it will be 100 plus this 50, so it will be 150. Then 150 plus 30, it will be 180. Then for the amount, it will be 160 plus this, so it will be 199,000. Then on 8th, there was a shortage of 9 units. There was a shortage of 9 units, so this is like an issue. we put it under issues. Shortages or losses, we put them under issues. So we are going to come here and write the date on 8th. Then there was a shortage, the quantity is 9 units. And then the rate, they have told us here where there is NBs that the 8th, the shortages that were made on 8th was part of the third purchases. So these shortages that were made on this date were part of the purchases that were made on this date, meaning that we are going to use this as our rate. So 9 units at 1,200. So the amount is going to be this times this, which is 10,800, like that. Then here the balance, it's going to be this minus this. Since it's an issue, it's going out, so this minus this, it will be 171. Then for the amount, it will be this minus this, so it's going to be 188,200, like that. Then we continue. On 10th, there was an issue of 40 units. So there was an issue on 10th. There was an issue. We put it here under issues of 40 units. So 40 units. So 40 units, what are we going to use as our rate? Since it is a first in, first out method, it means that what was in the store first will be issued out first. So we had this balance of 100 units. It was the first one in the store. So this balance of 100 will first be issued out, and when it's done, then these ones will be touched. So 100 units. So we are going to get this 40 from this 100. So it's what will be issued. What will be issued will be gotten from this balance, the 100. So we are going to use the rate of this 100 units. It was 1,000. 100 units at 1,000 each. So our rate here is going to be 1,000. So the amount is going to be 40,000. Then the quantity, it's going to be this minus this. Since it's an issue, we subtract this minus this, so it will be 131. Then the balance, it will be this minus this, so it will be 148,200, like that. Then on 15th, there was an issue of 70 units. So there was an issue of 70 units. So we come here and write 15th. There was an issue of 70 units. So the rate, what rate are we going to use here? So here, remember on the balance that was in the store, there was 100 units. We've removed 40, meaning we are remaining with 60 units. So here, 60 units are going to be at 1,000. So the 100 units are now done. 60 plus this, it makes 100. So here we are remaining with 10 units. So these 10 units are going to be gotten from these purchases that were made on 3rd. So the 10 units will be at 1,200, like that. So the amount will be this times this, it is 60,000, then plus this times this, which is 12,000. So it's going to be 72,000, like that. Then for the balance, the quantity will be this minus this, which is 61. Then the amount is going to be this minus this, which is 76,200. Then on 20th, there were purchases of 30 units at 1,500 each. So 20th, there were purchases of 30 units, 30 at 1,500 each. So this times this, what we get is 45,000. Then we continue. On 22nd, there was a purchase of 10 units at 1,600 each. So 22nd, there was a purchase of 10 units at 1,600 each. So this times this, it is 16,000. Here we didn't get the balance. Here the balance is supposed to be this plus 30, which is 91. Then this plus this, which is 121, 200. Then for this it's going to be 91 plus 10, which is 101. Then this plus this, which is 137, 200. That becomes the balance. So we are still continuing. Then on 24th, there was a return of 15 units. So here in our NB, they've said where the returns on 24th had been issues made on 15th to a user department. So these issues that were made on 15th, they were 70 units. And 15 of them were returned. 15 of them were returned on 24th. So returns are put under purchases since it's like we are receiving it back. So we come here on 24th, there was a return of 15 units. So on these issues that were made on 15th, they were 70. 15 were returned. So what are we going to use here as our rate? Because we had two rates. We had 1,000 and then 1,200. So we are just going to get the average of these two. So 1,000 plus 1,200 divide by 2. What you get is 1,100 is what we are going to use here as the rate. So the amount here is going to be this times this, which is 16,500. So the balance, it's going to be this 101 plus 15, which is 116. Then the amount, this plus this. So it's going to be 153,700. Then we continue. On 27th, there were issues of 25 units. So on 27th, there were issues. We put them under here of how many? 25 units. So 25 units, what are we going to use as our rate? Remember, here on the 50 that was purchased, we had already removed the 9, meaning it had remained 41. Then we also removed this 10, so it remained 41 minus 10, it remained 31. Yeah, so these 25 units are going to be taken from this stock, since we have 31 of this stock still in the store. So we are going to get 25 from this. So it will be at 1,200, since the stock was purchased at 1,200. So this times this, it will be 30,000. Then for the balance, it will be this minus this, which is 91. Then this minus this, which is 123,700. Then the last one, on 30th, there was issues of 70 units. So 70 units. So what rate are we going to use here? Remember, from this we had 31, then 31 minus 25, we remain with 6 units. 6 units from here are going to first be issued. So we are going to have 6 units at 1,200. Then here we are going to be remaining with 64 units. So we get 30 from the purchases that were made on 5th, 30. So 30 will be at 1,300. So we are remaining with 34 units. We also get 30 from these purchases that were made on this date. So another 30 at 1,500. Then we get 4, the remaining 4, to make 70 from this one. So 4 were issued at 1,600. So we are going to get 6 times 12 plus 30 times this plus 30 times this plus 4 times this. Then we get the amount. And our amount is going to be 97,600, like that. So that is the first in, first out. Like what was in the store first will be issued out first. Like we first issued out the 100, then after the 100 we went to the 50, we went to the 30, we went to this 30, then we went to the 10. What was in the store first will be issued out first. That is the first in, first out. So here the balance, we shall get this minus this. This minus this, it will be 21. Then this minus this, it will be 26,100. So here we removed 4 from the 10, meaning we remained with 6. So 6 plus 15, it actually makes 21. So it means that there are only 21 units remaining in the store. Yeah, 21 items remaining in the store at that. So that is the first in, first out method. If it was last in, first out, it will be the opposite. Like what was in the store last is issued out first. Like you first issue this before this, you first issue this before this, like that. So this is the first in, first out method. Then our question, they asked us to calculate for the cost of goods in production. So the cost of goods in production cost of goods used in production. So here we consider the total issues, total cost of issues minus returns. Let's put it into brackets, minus returns plus any shortage or what is stolen, something like that. So here we have the total issues like this plus this plus this plus this plus this. That is it. So it is 10,800, which is this, plus 40,000 plus 72,000 plus 30,000 plus 97,600. So all this minus what was returned. The returns on 24th were 16,000. 16,000 plus any shortages that was made. This, the 90 units, which is 10,800. So what you get is the cost of goods used in production, which is 200. That is the total cost of goods used in production. You get the total issues minus returns and shortages. In case they asked for the goods, only goods used in production, you would get total issues minus returns plus shortages or what is stolen. So the total issues. So here you only consider this column of quantity, this plus this plus this plus this plus this, that, then minus this and this. So it would be this plus this plus this plus this plus this. It is 214 minus into brackets, which is 9 plus 9 plus the returns, which is 10. 9 plus 10. So what you get will be the cost of goods. So 214 minus 19, it is 195 units. So these are the goods that were used in production. So for the goods, you just use this column of quantity. Then for the costs, you use the column of quantity. For the cost, you use the column of amount. That is it. Then another question was valuing of closing stock using the FIFO method. So what is the value of the closing stock? This is the closing stock. So it is 21 units at 26,100 UGX. That is the value of closing stock using the FIFO method. So that is the FIFO method, and it's asked most of the times, meaning it's examinable. Thanks for watching.